Hello friends, we are on the last lecture of our amendment batch 3, that is lecture number 9, and you are on which page? You are on page number 112 of your amendment batch 3 notes of SCM and PE. Okay. So let us discuss mock test papers. I'll just read out what I have written for you. During 1st May 2019 to 30th April 2020, that is 1 year, ICAI uploaded only one mock test paper with solution on its website, and it is titled as October 2019 test series. However, after going through all the questions in the above mock test paper, I noticed that most of the questions were borrowed either from module or RTP or from exams, previous exam papers. There were only 3 new questions in it. Hence, to avoid the duplication of work, I have excluded the repeat questions and included only 3 new questions here. My general observation based on past experience is that mock test papers contain the repeat questions and not the new questions generally. And it is also observed that ICAI withdraws these mock test papers from website after some time. I think this I had discussed in the last lecture also. So let us see the summary of October 2019 mock test paper. Now question number, this question number is from mock test, and I am giving the reference of similar question from our classroom notes. From version 3 I am giving the reference, alright, version 3 notes. Like a question 1. This question is same as question 18, page number 42 from chapter 8 of volume 2 notes, version 3. The name in our notes is, earlier name is Grab and Go, is the earlier name which we had in our notes. Here they just change the name of the company in the mock test paper so that it appears to be a new one. Question 2 is a new question, and question and answer is given below, so this we will be discussing. Question 3 is exactly same as question 8 from page 161 of chapter 11 volume 2 version 3 notes. Earlier name means the name in our notes was Great Bus Company. It is just for you to search if you want to, and the name in this mock test paper might be slightly different. I have not written that name because I have not printed that question altogether. But if you compare, try to compare and find the truth with my sentence, then you can download the mock test paper from Institute's website and then compare it with our regular notes. You will find with just name change of the company. Similarly, question 4a, the earlier name is Sun Chemical, reference I have given, I am not reading. Question 4b is also same from our notes. Question 5a is also same from our notes. Notes also contains the module questions, RTP questions, and earlier exam questions. Question 5b is also the same, and name is also same. Now question 6a is a new question, so question and answer is given below, and question 6b. So these are 3 questions, question 6ab and question 2. So these 3 questions we will discuss today. So I am taking you to the new questions excluding repeat questions. Check this. Question number 2 from that mock test paper. X Technologies Limited develops cutting edge innovations that are powering the next revolution in mobility and has 9 tablet smartphone models currently in the market whose previous year financial data is given below. So model names are Tab A10, A001, B002. So it is A, B, C, D, E, F, G, H, I and 01, 2, 3, 4 up to 9. So these are the model names. Sales is given in rupees 1000 from last year's data, previous year's data. And profit volume ratio, that is PV ratio, is given to you for each tablet. This is the data given from the earlier year. Okay, that's all is the data. Name of the model, sales in rupees 1000 and PV ratio. And what is asked, required. Using the financial data, carry out a Pareto analysis. Okay, that is 80-20 rule of sales and contributions. You have to do the Pareto analysis for sales also and for contribution also. That is for 8 marks. And second is discuss your findings with appropriate recommendation. So once we complete the Pareto analysis, then you'll have to observe the data and give the appropriate recommendation. That is the theory part. Again, you will notice the practical part is for 8 marks and theory part based on your report and giving the recommendation is for 12 marks. So the composition of theory is always there in this syllabus now. Okay, we'll target this part first. See, doing Pareto analysis is similar to what you had done earlier in intermediate, like ABC analysis of inventory control. You used to categorize all the items on the items in the inventory in category A, B, and C. A category is paid highest attention, B category moderate attention, C category lowest attention. ABC analysis is one of the use of Pareto analysis only. So you have to recollect that intermediate. In intermediate, we used to arrange the items of inventory based on their consumption value. Highest consumption value at the top and lowest consumption value, annual consumption value at the bottom. Similarly, we'll have to do the Pareto analysis here. We'll have to do it twice. Once we'll have to do it for sales and second we'll have to do it for contribution. So first analysis based on sales. Sales will have to arrange highest sales to lowest sales. Now if you check this sale values given to you, they are already been arranged from highest to lowest. So it's already one work they have done for you. Sales is already been arranged. Now you have to calculate each sales as percentage of total sales. And then you have to take the cumulative total of that percentage. Right? And you will get the Pareto analysis. So it is just rearranging the data and converting it into percentage. So check that answer. According to me, it's very simple question, bonus question. So first answer, Pareto analysis based on sales. Fortunately, the data given in the question is already arranged in the decreasing order of sales, that is higher to lower, that is from highest sales to lowest sales. We need only to calculate the percentage sales to total sales. Each model is having sales revenue as what percentage of total sales for each item and cumulative percentage sales to do the Pareto analysis. So same sequence, model numbers are written because sales is already in the same order. This sales is written. Now 5,100 is what percent of total sales? 14,500, 550. 14,550 is the total which you have to take, total of the sales. That comes to around 35.05%. Then 3,000 is what percentage of 14,550? So that comes to around 20.62% and so on. Naturally, total will always be 100%. So you are expressing each sales as percentage of total sales. And here you are taking cumulative total. This first figure will remain same. Now this plus this means 35.05 plus 20.62 is cumulative percentage to total sales. Then 55.67 plus 14.43. Cumulative sales is 70.01 and so on. Now we'll do the observation also. It means only first three models account for around cumulative 70% sales. So 70% of your sales revenue comes only from first three models. That is A001, B002 and C003. This type of discussion and recommendation you'll find in the theory. So this is as far as sales is concerned, Pareto analysis is done. That's all. Rearranging the data and using the calculator. Now let us take the second part of the question. That is, you have to do the Pareto analysis based on contribution. Now for this, what we'll have to do? First, sales multiplied by PV ratio, you will get contribution. So you'll have to prepare one statement of contribution. Sales multiplied by PV ratio. Correct? Sales into PV ratio, you'll get contribution. Sales into PV ratio, you'll get contribution. Sales into PV ratio, you'll get contribution here. Now once you get contribution, then what you'll have to do? You'll have to rearrange all the data with highest contribution on the top and lowest contribution at the bottom. So higher to lower, you will rearrange the data based on contribution and again calculate the percentage. That is each product's contribution or each model's contribution as compared to total contribution. That percentage we want. We don't want PV ratio now. We want each model is generating how much contribution as compared to total contribution generated by all the 9 models. And then you have to take the cumulative total of those percentages. So the answer must be here. Let us check. Pareto analysis based on contribution. So we first need to calculate contribution earned on each model of phone, and it can be calculated as sales into PV ratio. So this is what I have just copied the same data in the same sequence first. This is copied, this is copied, this is copied, and then sales into PV ratio and contribution is calculated. Now once you calculate contribution, now you have to decide the ranking. Now you will notice the highest contribution is this. So this will go at the top. This will have first rank. Second highest is, I think, this. So this will go to the second place. Third highest will be, I think, 300.09 and so on. So you have to rearrange them. So this has been rearranged. So you have to rearrange in the decreasing order. So this has been rearranged. Just check. Rearrange data. Once you have rearranged it, then you have to take the total of all this contribution. Total of all this contribution is 2235.22. Total of all the 9 models. Now 690 divided by 2235.22 into 100. So it will come to around 30.87%. Means only your tablet B002, it generates 30.87% of the total contribution generated by all your products. Then this next tablet E005, it generates a contribution of 435.02 divided by total contribution. It will give you a percentage 19.46%. So this E005 model generates 19.46% of the total contribution generated by all the products. So these are individual percentages, and then cumulative total of percentage only. You have to just take cumulative total. And cumulative total, you will find first 3 models generate around 63.76% contribution, or if you take first 4, so cumulatively first 4 tablets generate 75.17% of the total contribution generated by all the products together. And based on this observation, you have to just give the recommendations, right? So looking at the report of sales and contribution, right? If your objective is to maximize sales revenue, then you have to refer the first Pareto analysis. If your objective is to maximize contribution, that is profit, then you have to refer the second Pareto analysis, right? So depending upon your angle, maximization of revenue and maximization of profit, and to which product you should pay more attention. So this is the recommendation given. Okay, now we go to question 6a. It seems to be a theory question. It's a case scenario basically. Case scenario based on management accounting, environmental management accounting. Based on that, there is a case scenario. So naturally I will skip it. You can read it, right? A case scenario. A simple one, smaller one. So question and answer is printed of this case scenario theory. Now let us check question 6b. Okay, it seems to be a little practical question. Question 6b. LNG Limited has 3 divisions. Its desired rate of return is 14%. Desired rate of return or minimum expected rate of return, right? Whatever you call, is 14%. The operating assets and income for each division are as follows. So divisions are given 3, L, N, G. The assets employed in the division, operating assets which are used in the division is given. Operating income is given. Okay, let's go ahead. LNG Limited has rupees 8 lakh additional cash to invest in one of its divisions. You have 8 lakh more to invest in either of the division, either L or N or G. The divisional managers have identified investment opportunities that are expected to yield the following ROI, that is return on investment. Now these divisional managers have identified the opportunity that if we invest 8 lakh in some new project, how much return it will generate. So all the 3 divisions have given their report, and this is expected ROI on additional investment. Please remember, L can generate 16% return on additional investment, N can generate 12%, and G can generate 15% return on additional investment. That's all, and the question starts. Oh, there are small questions of few marks. So let us discuss each one of them. Calculate ROI at present for each division and state which division manager is currently providing the highest ROI. For 3 marks, very good. You have to calculate the present ROI and say which manager is generating highest ROI. So my dear friends, how you will get the ROI? Just check. This income divided by operating assets. Operating income divided by operating assets into 100, and you will get ROI for each of the 3 divisions, and you can select the highest one. The answer must be printed here. We will go one by one only. This is calculation of present ROI. Operating income divided by operating assets into 100, and this is the ROI. So L is generating highest ROI, N is highest is 18%, N is generating 16.5%, G is generating 13.6, that is lowest. So division manager L provides highest ROI. That's all. That was for 3 marks. Now, what is the second part of the question? This we have done. Second part is this question. Based on ROI, identify the division manager who would be most eager to accept the additional investment. Based on ROI, identify which division manager would be most eager to accept the additional investment. Now, this requires little thinking. For additional investment, data is here. This data. Now, what is your first answer, prima facie answer, that which division manager will be eager to invest? Probably your answer will be division L, but that is not correct. See, each division manager would like that his overall return on investment should be highest after doing additional investment. Now, if additional investment generates lower return than the present return, that is the present ROI, then the overall ROI will drop and division manager won't like that. On the contrary, a division whose expected ROI is higher than present ROI, then that division manager would like to invest additional investment because his overall ROI will improve. So to give the correct answer of this question, see what will happen. Just check, keep these percentage in mind or keep the notes in front of you, 16, 12 and 15%. I am writing it here. Just a minute. The expected return on additional investment. This is for additional investment. 16, how much was given? 16, 12 and 15%, I think. Yeah. 16%, 12% and 15% is the additional ROI. Now, if you compare division L, its present ROI is 18% and new ROI on additional investment will be 16%. So its overall ROI will go down from 18%. So L won't go for additional investment. N at present is already earning 16.5. On additional investment, it will earn 12%. So again, its average ROI will come down. So it won't be willing to invest. However, division manager G, his present ROI is 13.6% and the new ROI on additional investment is 15%. So two together will take his overall ROI up. So who would be more eager to invest? G would be more eager to invest. That is the answer. Okay. Answer must be written there. Okay. The answer is written here. Now we'll go to third part of the question. Third part of the question is, answers are already printed. You can read it. Based on ROI, identify the division manager who would be least eager to accept the additional investment offer. But based on which method of measurement, performance measurement, ROI. Who would be least eager? Now check this data again, least eager manager. I think least eager manager would be whose reduction in ROI will be highest after additional investment, whose ROI will drop highest, will be least eager to invest. Now you will notice here from 18 it is dropping to 2% by 2%, but here it drops by around 4.5%. And in case of G, it improves on the contrary. So G is the person who is eager to invest. We want least eager to accept. So I think division manager N would be least eager because his reduction in ROI will be more substantial than other divisions. So that is question 3. Question 4. State the division that offers the best investment opportunity for LNG Limited. Which division offers the best investment opportunity? Naturally, the division which generates highest ROI on additional investment offers the best opportunity for the company as a whole. For the company, I am saying, for company you are investing 8 lakhs, and on 8 lakh you will generate either 16% return or 12% or 15%. So naturally 16% will be the best opportunity for the company. So division L offers the best opportunity for LNG. Now discuss the conflict between the requirements of question 2 and 4, right? These two. Now there is a conflict. See, as far as company is concerned, who offers the best opportunity? L. But question 2 says who is most eager to invest, and most eager to invest would be division manager G. So there is a conflict of answer, which is nothing but the reason for conflict is individual performance and overall performance of the company. Overall performance of the company is called goal congruence, and individual performance is division wise ROI. So division manager will think about his division's ROI, but as a CEO of the company, you have to think about the overall ROI of the company or overall interest of the company. So that is the on those lines you'll have to discuss the conflict between individual approach and overall approach. And sixth, advise how the residual income performance, residual income method, which is better than ROI in some cases, how residual income performance measure could be used to motivate the managers to act in the best interest of the company, that is to achieve goal congruence. In residual income method, what you will be doing? So I will take you back to the question, residual income method. First of all, residual income is, you have to calculate the return from the project minus you have to deduct from it the minimum expected rate of return, that is also known as cost of capital. I will take you back to the question. Check here. Your desired rate of return is how much? 14%. So an additional investment of 8 lakh into 14% is your minimum return. If your project gives more than 14% return, then that remaining income is called residual income. And residual income, whichever division gives you highest, is best. Now naturally, what will happen here? For division L, which is expected to generate 16% return, okay? So from 16%, if you deduct 14% cost of capital or minimum expected rate of return, you will get additional 2% return. From 12%, if you deduct 14%, you will get a minus 2%. So naturally, it is not viable. And from 15%, which is expected return on new project, if you deduct the minimum expected return 14%, minimum expected return can be called as cost of capital also. So you'll get only positive 1%. So naturally this L will be better because it will give you residual income of 2%. So residual income method would be better to evaluate the performance. That's all. And all these answers are printed here. Right, so friend, here we end. We have reached to the last page of our amendment batch 3 notes. Answers are printed here. I hope my discussion is at least of some use to you. Those who are struggling to understand the questions or answers, for them my discussion will be useful. So we complete here the discussion of amendment batch 3. I wish you all the best for your examination. Okay friends, bye-bye. So we'll stop here for the day. And we'll stop here completely because we have completed amendment batch 3.